Yeah, and Andrew, we talk about all of these wonky definitions, but current account deficit. Can you explain what that is and why we have to really watch what the current account deficit is?
Yeah, it's really bad. That's basically from a budgeting standpoint. Current account deficits is the dollar amount that you are short from overspending. That's basically it. And the estimate amount is roughly about 227 billion, for the first quarter. And that adds to the existing monstrous pool of debt for the nation, which is right now close to 39.32 trillion. And if I'm correct, my prediction is that we'll hit 40 trillion by August of this year. And again, I track this on a weekly basis. And so the nation's debt go up anywhere from 20 to 60 billion a week. And so the problem is, I hate to sound political, but it is, we have too big of a government. And government bodies, they pass laws that will be self-preservation, basically protect themselves. And as we have grown government spending over the last decade, this is slowing down growth. The more government grows, the more taxes it will take to sustain this monstrous infrastructure. And so, yeah, it is a huge problem and we need to address it.
So the US continues to import more capital than it exports. And that's really what the account deficit is. How is that damaging to the investment world, Michelle?
That means that we're, as a nation, that foreign capital is critical to our infrastructure and our ability to function as a country. And what that also means is that puts downward pressure on the value of our currency because we're importing more than we're exporting. And so our dollar becomes worth less. But going back to the reliance on the foreign currency, that's more concerning to me over time. Wonder what happens if that becomes, we are not able to get that, foreign currency investment that we need to support our country. And I think you spoke about this last week, Ed. That might start to dissipate even more. I know that there are other countries that are starting to do that, but it may increase, it may accelerate. And that's going to be a problem for us and for our bond market and for our currency.